So when it comes to getting the best entries and exits on your trades, there's a couple of things you need to consider in order to execute those things effectively. Many traders struggle with finding good entries or exiting trades the right way. And if you follow the steps in this video, it can dramatically improve the accuracy of both your entries as well as your exit. Let's get into the charts. All right, guys. So you're struggling with your entries, you're struggling with your exits. First thing I'll say before we even touch anything on the chart, first and foremost, let's make sure that our strategy is defined, meaning we have defined what we're looking for, obviously, but we also have defined what is the criteria to even enter that trade. And we should also define something people skip, the criteria to exit that trade. Some people have a number goal, like this amount of pips or this amount of points. Some people have a structural goal, right? From one structure to the next. But it needs to be well defined based on your strategy. What is not only your entry criteria, because everybody's going to define that, but what is also your exit criteria in a trade. Now, also in addition to that, you need to dig deeper in detail. And this is what people are missing. Most traders only plan for the perfect market condition. And that in itself is a big detriment to your trading. The perfect market condition comes around, but it doesn't stay around. The market is going to change conditions, and you need to be able to know how to navigate those conditions or stay out of those conditions completely and entirely. Most of you will not. And because of that, you need to put in criteria on how to navigate markets that are not perfect. All right. So if you haven't done that, take some time, pause the video, take some time to think about all of the criteria in your strategy, and if you have baked in the entry and exit criteria, and if you've accounted for different market environments. If you have not accounted for that yet, then you want to start accounting for that. Think about different types of market environments. When market is choppy, when we're in a consolidation, when the market is extremely volatile, all of these different conditions, how does it change your strategy? Does it invalidate your strategy? How much does it affect your strategy? Notate all of these things and also make a decision on whether you should be trading or should you not be trading, or should you just adjust your strategy. That is absolutely number one. The next thing we want to do is start getting into the charts, and I'm going to base this on my BC30 strategy, of course, and you can base it on whatever strategy that you use, but I'll show you how I can improve my entries when it comes to BC30. All right. So I'm in the charts here on gold, and we're going to start with this particular area right over here. This area of interest where we see this area of support right over here. And I'm going to box in also the area of resistance. Okay. We box in the area of support. We box in the area of resistance, and we observe what price has done. Now, next, we realize that we have a breaking candle. The breaking candle is right over here. All right. And this breaking candle happened to be the candle that broke through 5,000 for gold. So very important candle. This happened on a Sunday for me on the East Coast. All right. So Sunday night, and we saw that happen, and we knew that price would continue going up. So nonetheless, following the strategy, we have our breaking candle. Breaking candle breaks clearly, no arguments, no nothing. Next thing we want to do is enter on the next candle. Now, one of the ways in which I improve my strategy, improve my entries at least, is I'm going to make sure that I'm not rushing necessarily into entering the trade, but I'm making sure that it's clear that I have momentum on my side. One of the ways that I want to make sure of this is it's very important, and I'll remove this vertical line so you can see. It's very important that my entry candle is going beyond my breaking candle upon entry. Very important to me. Now, why is that important to me? Ultimately, we know that when it comes to candle structure, many times candles are going to form a bottom wick if we are trending towards the upside, or a top wick if we're trending towards the downside. I need to allow for enough room, or if not, I'll have to have a very big stop loss. Okay, so I'd rather, instead of just entering the trade instantly once this opens right over here, right, once this candle opens right over here, I'd rather enter the trade right about here, where it's getting past the previous candle, because then I know we definitely have momentum on our side, and hence it will improve my entry. I won't face that much drawdown, and ultimately it will be a smoother ride with this trade. If you enter too early, not necessarily in this case, but in many cases, sometimes the candle is going to retest first, and you're going to have to bear the weight of that retest and be able to withstand that with your stop loss before it actually goes off in your direction, if it does go off in your direction. Another thing that you realize is, if this candle that I entered this trade in, this particular candle over here, if the candle that I entered this trade in for any reason flips, then I have more of a confirmation that it's probably time to get out of this trade. Why? Because ultimately, if it's flipping back within the zone of the breaking candle, it's not looking like there's enough momentum to continue going beyond. All right. So all of these things help me improve my entries. But now, how do I improve my exits? How do I improve my exits? Now, this is going to be a little complicated when it comes to an all-time high. This is why. Because when we're talking about an exit, the key thing you want, the key word here when it comes to an exit is compare. The key word is compare, meaning I need to compare what area price has gone to before, what area price has struggled at before, right? In order to determine where's a plausible exit. And there are nuances as well, meaning, so if I'm in a session that notoriously doesn't have enough volume for the instrument that I'm trading, then I probably shouldn't go for that much, even though structurally, I can possibly get to another zone. But I probably don't have the momentum because of the session, right, in order to do that for the instrument that I'm trading. Okay, so ideally what I want to look for is the comparison to the left from where previous price has been. But when we talk about this particular example, there is no comparison because we made an all-time high. When it comes to all-time highs, be conservative, but also be smart. A lot of times when you break a major psychological barrier like 5,000 on gold, price tends to really explode through, right? It really tends to continue, as you can see here, continued all the way to 5,100. Now, the smart thing to do is, because you have nothing to compare it with and you don't necessarily have a plausible TP, it's best to be more conservative with the TP, but also let something ride and continue on its way up, because we really don't know where this is going to stop. So it's very important. Take what you can very quickly, but also let something ride and move your stop loss up along the way so you could capitalize on the majority of the move. Now, for most instances, we are not breaking all-time highs, right? Most times we are not breaking all-time highs. So what do? Let's go down to where we have some modes of comparison. So for example, let's take this area right over here. In this area, I'm going to box in price and show you what I'm boxing in, right? We have an area of support over here. And we have an area of resistance for price right about here, okay? We have our breaking candle, which is right over here. This is our breaking candle. Now, in order for us, when we enter this trade, as this candle is going beyond our breaking candle, we enter this trade, but where do we exit? All right, where do we exit and get a quality exit for this trade? Well, what we do is we look to the left and we compare. We compare where previous price has been. Okay, so now as I look to the left over here, where has previous price been and where did it struggle? Previous price has been to this area before, right? Previous price has been to this area before, but most recent price stopped just about here. Okay, most recent price stopped just about here. So for me, if I'm entering this trade, the safe bet, although price can possibly go all the way to the top, but the safe bet based on most recent price tells me I should probably TP more so around here. So my TP for this trade would likely be right over here. And honestly, it may not look like much, but this is a pretty good move when you think about it. If we're talking about it in terms of pips, from here to the resistance up here is over 100 pips or over 10 points. So that is a pretty good move. And that's how you want to get good quality exits. Ultimately, getting good quality exits is not about getting an entire move necessarily. I think a lot of traders get that confused. Sometimes you see how far a move goes and you're like, oh man, I could have made this, I could have made that. You coulda, shoulda, woulda all the time when it comes to the market. A good quality exit has to do more with structure, has to do more with your strategy, has to do more with making sure you're hitting TP most of the time that you are entering and exiting a trade. Are you hitting TP, or are you getting out earlier? Or are you realizing price went all the way up, retraced, and now you got to take what's left? Are you hitting TP? That is how you qualify a good quality exit. All right. So you want to constantly hit TP, not necessarily always make sure you get the whole move, because that is going to be very difficult to predict. Sometimes price doesn't always get all the way to a zone, or sometimes it breaks beyond the zone. And that's not easy to predict. What you can predict, however, is the likelihood that price gets to this area, right? That's what you want to predict. How likely, based on previous data, right? Based on my comparison, is price going to get to this area? And the more you are more accurate at that, the more you use this way of doing things, the more you're going to realize you're hitting TP after TP after TP after TP. So guys, I know these were a few examples, but if you go through this over and over, you'll realize these are some good tips in order to improve your entries and your exits. Your entries more so have to do with making sure all of your criteria for entering that trade is well defined, and making sure you use certain things like momentum to your advantage, right? Like I do in BC30, but your exits have a lot to do with comparison and previous price. Okay. If you don't have comparison and previous price and you're breaking an all-time high, you want to be a little bit more conservative, but also be willing to let something ride, because you don't know how long price will go. All right. Ultimately, guys, this can be done. You can get better at your entries and exits. You don't have to be drowning and drawdown all the time, and you don't have to take major risks like having huge stop losses when you can improve your entries and your exits. So I hope you guys gained value in this video. If you did, please like, share, and subscribe. And let me know in the comments, guys, in what ways do you struggle with entries and exits? If there's anything that wasn't mentioned in this video, maybe I'll make another video in the future to address your needs. Hope you guys have a nice day. Let's get it. Till next time.